What is inflation? Inflation happens due to a huge gap in the supply, low, and demand, high, of goods and services. Types of inflation. We'll discuss three main types of inflation. 1. Demand pull inflation. Demand for goods and services can drive up their prices. If something is in short supply, you can generally get people to pay more for it. Example, plane tickets for a vacation go up when the demand is high. 2. Cost push inflation. When demand pull inflation is going strong, and when raw materials costs increase for businesses, the businesses in turn must raise their prices, regardless of demand. Example, when the price of chicken keeps going up, eventually your favorite restaurant will need to charge more for the food items. 3. Built-in inflation. When demand pull inflation and cost push inflation occur, employees may start asking employers for a raise. If employers don't keep their wages competitive, they could end up with a labor shortage. Example, if a business raises workers' wages or salaries and tries to maintain profit margins by raising prices, that's built-in inflation. Recent events that triggered the inflation. 1. COVID-19 has affected practically all countries because their economies were closed for a few weeks, months, or even a year. People got sick and couldn't work, which affected the supply chain, which in turn affected prices for the limited supply of the workforce. This is demand pull inflation. The second blow came from the conflict between Russia and Ukraine, which prompted economic sanctions against Russia by the European Union, the United States, the United Kingdom, Canada, Switzerland, Japan, Australia, and Taiwan. What does that mean? Ukraine and Russia account for about a third of the world's wheat and a quarter of barley production, not to mention some 75% of the sunflower oil supply. Russia accounts for well over 10% of global oil and natural gas production. This is cost push inflation. Indices to measure the inflation. Consumer Price Index, CPI, the average price of consumer goods and services purchased by households. Wholesale Price Index, WPI, the price of goods at a wholesale stage, that is, goods that are sold in bulk and traded between organizations instead of consumers. Few countries follow PCE or PCI. Measures to tackle inflation. Monetary policy. Central banks intervene to stop money flow by raising interest rates. When the interest rates are high, less lending and spending by people and businesses go down, and inflation slows down. Fiscal policy. A higher rate of income tax could reduce spending, demand, and inflationary pressures. Currency demonetization, demonetize higher denomination currencies. Such a step is typically taken when the country has a surplus of black currency.